Welcome, everybody. It's good to have you with us as we get started to look at Tesla and our earnings call lab here at Acumen Learning. Good to have you here. Sahil, thank you. Good to see you. Good to have you join us as we get going. Folks, we're excited to have you spend some time with us today. Let me kind of describe what we're going to do. The whole purpose of these activities, it's a continued learning for our graduates to learn how to listen to an earnings call. Many of you have gone through one of our programs where you learned about the 5 drivers every company focuses on: cash, profit, assets, growth, and people. These 5 drivers are fundamental, whether you're a small little street vendor all the way up to a very large, 13 billion or so of revenue for Tesla in Q1 of this year. So we use this as a way to take the tools, the resources, and the framework to be able to assess a publicly traded company. For those that are new with this, I want to make sure the technology's up and running. There's a lot on the call. And so we'll use the chat box as our number one way to communicate. So if you will just open your chat box, make sure it's set to everyone as was described by Curtis here, and just put in the chat box, where are you calling in from? Could be a city, a state, a country. Where are you calling in from? Let's just make sure that chat box working. My team here, we're out of Salt Lake City, or a little bit south of Salt Lake City, Utah. Founded in 2002 here in kind of Utah area, from 2 executives from Franklin Covey, Stephen M.R. Covey and Kevin Cope. So we've been in the business for a number of years, focused purely on this topic of a business and financial acumen. Excellent. Looks like the chat box working well. Good to have you with us. The second tool I'm going to be using to interact with is our polling technology. As you look at this polling technology, the first question I'm going to ask, just to make sure it is up and working, is just, have you had a chance to listen to, have you had a chance to attend this webinar? Yes, it's my first time. No, I attended the webinar earlier this year. Or you know what? I haven't had a chance to attend this webinar. Folks, as I said, it's a follow-on to our course. Now, if you haven't been to our course, no worries. We'll talk to you about how you can access content if you happen to be with one of our customers. If you want a self-paced option, at the very end, we'll share some resources for you. But you don't have to have gone through a program to get some value out of this program. In fact, we're going to give you a workbook. And this workbook is a step-by-step process, very simplified process. It's actually the same process I'll walk you through as we look at Tesla on how to use these tools to assess a publicly traded company. So whether you've gone through our program or not, we'll set you up to be more comfortable around that. Folks, I'll go ahead and end the poll. Most of you have responded here. Let's see the results. Let me share the results with the group. It looks like about 40% of us are brand new. Good to have you with us. I'm glad you joined us. My recommendation is if you engage in these 2 to 3 times consecutively, you'll get very comfortable on how to use these tools to assess your company, or maybe you're using it to assess a customer company, or just your own investment as you look to invest your dollars, understanding the companies you're investing in. So this resource, it will be a great resource. Those that haven't attended the webinar, thank you. Welcome back. Good to have about 60% of you who've had a chance to join this webinar at some point with us. It looks like the technology is working. We're all up and running. Let's jump right in here and get going, okay? So I'm going to go ahead and do another poll. My second poll is going to be, when is the last time you had a chance to actually listen to an earnings call? You're coming to a how to listen to an earnings call webinar. So when's the last time you've listened to one of these? It's been this year. It was last year. Been a while. Or for some of us, maybe you've never had a chance to listen to these earnings calls. No worries. It doesn't matter how experienced you are. This tool will absolutely be helpful as you think about understanding how a company's making money, how decisions are made around the money-making process, but most importantly, what can you do individually to drive the success of the organizations you're looking at? As we look at that poll question, here's the results real quick. I'll just share those with you. Basically, it looks like many of you have listened to an earnings call this year. It's been last year. It's been a while for about 12%, and actually 23, almost a good portion of us, between 23% saying they have never listened to one, or 3% saying I'd rather go to the dentist. Thank you for sharing that with us. We got a few of us who haven't had a chance to engage around this, so this will be perfect as we walk through that. Now, every month we pick a different company. If you're with us last month, we had Rivian. Rivian is also an electric vehicle company. If you're not as familiar with them, they do the trucks. That's a very common product for them. But probably the most common I think of when I think of Rivian is the Amazon delivery trucks, as my family likes to use that quite a bit. They're electronic vehicles or Rivian vehicles. What's interesting, we decided to go with Tesla right after and do this comparison, this idea of, okay, here's one that was started Tesla in 2003. You have Rivian, who was started in 2009. So about 6 years after, and kind of what's that transition? If you were in our call last month, you'll remember that they haven't hit profitability. In fact, it was their first quarter, Q4 of last year was Rivian's first quarter of gross profit being profitable. If you actually go back, we did a little history lesson on Tesla, you find the same thing. It actually wasn't until 2020, I believe, is when they were first net profitable as a company. So we'll look at kind of some of those nuances. Obviously, there's a lot of unique things going on with Tesla today. We'll look into their financial performance, how their Q1 was in 2025, and where they're headed, what they're trying to accomplish as a group. Let me go ahead and jump in. As you think about these earnings calls, they happen on a quarterly basis. As you think about this opportunity, I would call them a hidden gem. What do I mean by that? They're absolutely of value, whether obviously if you're an investor, if you're working for the company, there's huge value in engaging in these. If you may sell into a company like Tesla, maybe they're one of your customers, looking at these are absolutely helpful. And then, of course, if you're looking to invest in a company, as you think about types of investments, you have more of that kind of technical trading where you're looking at PE ratios, you're looking at volumes, you're looking at betas and time the market, so to speak, versus what I call that fundamental trading, where you're really understanding the business, the intricacies of the business. What do they really do? Where do they fit in their industry? How is their financial performance over a number of years? I think that these earnings calls are absolutely valued to help that as you think about from an investor perspective. What's interesting though, even with these calls and these large corporations that are publicly traded, here's a stat that came from Harvard Business Review that says only about 95% of employees, 95% of employees don't understand company strategy. What are they trying to work towards? What are they driving towards? Here's another one. Even with these earnings calls, 90% of employees don't understand their company's important business or financial metrics. Interesting. Imagine you're the CEO of Tesla, Elon Musk, obviously very well known in the public eye, obviously over the last number of months for sure. And you've got this large company and you recognize that 95% of your employees don't understand corporate strategy, 90% don't understand kind of key metrics. As you look at this situation, as you think about Tesla, here's what they're trying to do. We're founded with the core mission to accelerate the world's transition to sustainable energy. If you go back to their original roots, that's what it's about, trying to reduce their carbon footprint. We hear a lot about this it's been around for a number of years, but particularly since 2020, a lot more effort. In fact, there's a global initiative to reduce what they call net zero, have no additional impact, and reduce carbon footprint by 2050 with some big goals hitting in 2030. You'll see a lot of companies. If you were with us a number of months ago, we looked at one of the major automobile manufacturers. At the time, they only had one, electric vehicle, but yet they then forecasted to grow their electric fleet to about 25, if I remember correctly. So really trying to go after this market. What do? They design, develop, manufacture, sell, lease high-end, fully electric vehicles. Now, we're very familiar with that, but they also do a number of other things, also focused on energy generation. That's a big deal. As you think about AI, by raising a hand, how many are using AI in your day-to-day operation activities? Or give me a thumbs up if you're using that. That takes a lot of electricity to be able to have AI do what it does, whether it's something as simple as a chat GPT or here at Tesla to be able to do these self-driving vehicles. That takes a lot of electricity. So how do we capture and generate more electricity? So you got energy generation, you got storage systems. They also have robotics, humanoid robotics that they're focused on. Of course, we're very familiar with their products, Model 3, Y, S, X, Cybertruck, storage system, Cybercab, humanoid robotics, etc. Only became profitable in 2020, looking for profitable growth, product line expansion for new and more profitable products, especially with their newer vehicle, their Model Y. About 125,000 employees globally dispersed. So imagine, put yourself in the seat of Mr. Musk. You got all these employees. You have this futuristic perspective. If you ever watched that old movie, what was it called? It was Minority Reports, where vehicles are driving all by themselves on these very dynamic, very fast-paced electric highways. This very futurist robotics type situation. In the end, what is it you really want your employees to know about your company, what you're trying to accomplish? What is it you want your customers to know? What about your shareholders and, of course, partnerships that you look at? That's what we want to walk through. The tool that I'm going to share with you, really is focusing on how to take the information that gets communicated on a quarterly basis and really understand it, the outcome of which will build your credibility, will build your career, build your company. Honestly, I've been doing this for 15 years, and employees that engage around listening to their corporate earnings call on a quarterly basis, what you're going to find about 2 quarters in, you'll really be more familiar with what are the key metrics and measures the executives are talking about. Once you do 3 quarters consecutively, you absolutely will have a very familiar, what is our strategy? What are we trying to accomplish? And then go back to your role and really impact the business. That's what we want to walk you through. How do you capture that information? I'm going to give you a simple process as well as a simple tool. As we get a chance to look at Tesla, here's their power wall. So this is a power wall unit. This was a single shift generated 1,500 power walls that drive electric generation. So let's look into their quarterly report and see what happened. So first step of our process is going to jump into what we call the prepare phase. So let's jump in there. What do you need to do to prepare? Quickly, for those that haven't had a chance to listen to these earnings calls, about 23% of us, let me explain. These calls happen on a quarterly basis. Now, are they required? No, you're not required to do them. That being said, boy, it's a very high percent, 99+% of companies will take this opportunity. What they are required to do here in the United States, but actually global, it doesn't really matter what one exchange you're traded on, is publicly traded companies, you're required to get information to your investors. As a US-based company traded on a US exchange, you fill out what's called a 10Q if it's a quarterly report, or a 10K if it's an annual report. Now, that's all the regulated stuff they have to provide. Rather than just shoot that out to the investment community, send it to investors, etc., what you're going to find is, Raymond, I'll come back to your question on net zero here in just a little bit. I just saw that. We'll talk a little bit more about that. But this rather than just submit that information, they want to get a chance to explain it. So the first, probably usually about a short one would be 15 minutes, a long one would be 30 minutes, where they actually get executives talking about where they wanted to go, how they perform, and where they think they're going to go in the future. Once they're done with that, it shifts and it's a Q&A. Now, the Q&A for most companies is not you and I asking a question, except for Tesla. Tesla actually has an avenue, I think it's ask.com, where you can actually ask questions as an individual investor to the executive team around their performance. And you actually had the very first question that came up was from an individual investor. So this is the Q&A. Now, most of the time with these investors, it's individuals who are part of these analysts who are part of these large investment firms. They're tracking these stocks and they're going to write a report. They're going to say, hold, sell, or buy. There's actually 2 others, but those are the most common. They're going to focus on that as a way to kind of make a recommendation to their investment community. That's basically what happens. Now, a short one would be 45 minutes. A long one would be an hour and a half, with by far the majority of them being somewhere around an hour. As you look at preparing for this earnings call, what do you need to do? First, you got to access the call. Now, let me just quickly show you how to do that. As you look to access the call, a great website we're all familiar with is Google. It's very easy to find. Now, you can go to their website, look at investor relation, click on it, navigate down to their quarterly report, or you just come here. It's pretty easy. Type in Tesla and what you're looking for, or any company, whatever company you're looking for. So Tesla. And it's already starting to guess, investor relations, okay? So I click on that. It's going to immediately take me right there. Now, you could have put quarterly earnings calls. You could do press release, whatever you wanted to do to capture that. As you look at where you want to look at, you just jump in and you're going to find information. So here's press release. So latest information that's coming from the company, you can see it there. If you actually go to their website, their investor relations page, right on the page itself, it gives you the most recent information. So just go there and investor relation. If you want to listen to the call, click right there and you can listen to the call. Here's that picture is a great picture. This is the humanoid. It's called Optimus, humanoid robotics. But right here, you got the most recent information. So if it's prior to the call, it'll have a little link and you can register, which basically just, don't worry, they're not tracking you per se. All it does is give you access to the call itself. Now, on the call itself, if it's prior to the call, there won't be anything there. Once the call happens, they provide this information. So here's the press release. We just saw that. Here's the actual slide deck that they used, if you want to listen to it. And then the Q&A portion of the call is right there. And then once they filled out their quarterly report, you're going to see that. So just highlight here. So here's their quarterly report. Here's their financial statements. Here's their balance sheet. Here's their income statement, etc. You could also jump and you want to see their shareholder deck. So this is the actual slide deck they use. Now, I love when a company has a slide deck. There's a lot of great information on how their performance went. Right here, you can see 20% down on their automotive revenue, 67% up on their energy generation and storage that they've created. So you get a lot of detail that they provide around their business. A lot of great kind of examples. One of the big emphasis is their Model Y. In fact, during Q1, they took all their manufacturing plants and retrofitted them so they could produce the Model Y. So here's all the kind of sharing the latest ones coming out. Their Gigafactory in Shanghai, first delivery of their Model Ys that they have out. This is an interesting one. I thought this was interesting. A Tesla diner coming soon, where look, you basically have a place to charge your vehicle and go get some grub type thing. A different view of a convenience store type model, etc. Anyways, all that information is provided. You can access it. Again, if it's prior to the call, register, just link on it. By the way, you don't have to register. You can actually get the recorded call or the transcript after the call itself. So anyways, that's how you access a simple Google search to find that information. That's the first step of what you're trying to do. Okay, once you've locate the call, the next step is to review your notes. Now you might say to me, Brent, I don't have any notes. I haven't done this before. Okay, no worries. As you saw, as we looked at that page, you could go back and look at Q4 and see what they said in Q4 if you wanted to. And that's a great way to kind of review. Now, once you've done this once, though, the notes that you put in this workbook, that's what you would review. You pull up your notes from the last quarter you listened to them. What did we say we're going to do? Okay, let's listen. How did we do? Okay, now let's do that same review of that workbook. And now you got a really good comparison of how they performed in one quarter to the other quarter, etc. The last thing that I recommend is to do it with a group, especially if it's your company. If you're a manager and you've got a team, I can't think of a better thing than once a quarter to come together, kind of listen to it, and then walk through the workbook. There's some very specific, simple questions you can ask yourself that are really going to help you make sure that your day-to-day activity is driving towards your corporate goals and objectives. If you're not a manager, talk to your manager. Say, hey, I'd love to review our earnings call together and just see what kind of key points we should take away as we think about our day-to-day activity. But it's a great way to kind of learn from each other and really solidify the concepts from the earnings call itself. That's the prepare phase. So simply put, you got to locate it. You review your notes if you have them, or go look at the prior quarter if you want to. You don't have to on your first one. You don't skip that if you want to. And then go through the exercise of the review and discussion with the team is my recommendation. The majority of what you're going to do, though, is once you listen to the call, how do you take all that information and consolidate it and to simplify principles, concepts, metrics that you can be working towards within your role? That's the analyze phase. Now, what I'm going to give you in the analyze phase is a simple model as well as two tools. We'll walk through them pretty quickly so you have that information, show you how to use them. That's where I need some help from our colleagues here. So those that are on the call that have been through our program, let's just do a quick review of the model, the 5-driver model: cash, profit, asset growth, and people. So open your chat box and let's just walk through it. As you think about the importance of cash in a business, why is cash so important in a business? There's common phrases. Cash is blank. Fill in the blank. There you go. Cash is king, Eric. Absolutely. It's king. It's queen. It's royalty. In fact, Ron Sharon says that it is a company's oxygen supply. So cash is vitally important. Now, you think about a company like Tesla. What do I need cash for? Obviously, they're very technology driven. So all the AI is a fully automated vehicle where there's nobody in the car. Now, you may have seen like Wayo, I think is what it's called, it's a Google company where they have these self-driving cars. Like if you're from Arizona, I think they've got them down in there, Phoenix, etc. We have all these cameras on it. Well, what he's doing is he's creating a vehicle. Thank you, Waymo. Thank you. He's creating a vehicle that has all that stuff, but it just looks like a normal vehicle. And there's no driver in there. So that takes a lot of cash to build out the technology, to build the innovation around that, et cetera, to drive your business. So cash is vitally important in the company. That being said, most of us didn't wake up today and say, look, I want to drive more cash today. More likely, we're probably more talking about, hey, how can I drive more profitability? How can I sell more? How can I, et cetera. But cash is absolutely vital and most important to a company. You'll absolutely see it when a company's running out of cash. You'll hear a lot more talked about. Let's talk about profitability then. If cash is vitally important, that's actually dollars, by the way. How much you have sitting in your balance sheet, how much you generate, actual dollars coming into your pocket in a given period of time, etc. Yeah, there you go. Yeah, it's more important than your mother. Ken Morsey said that. There was another one. I've lost his name. He was the Seagate CEO, I think, if I remember right. Al Shagard. Al Shagard? Yeah, something like that. Anyways, so vitally important. That being said, profitability, the accounting metric, actually eventually becomes cash once you actually collect it. So let's talk about profit. Now, that's the one we probably talk about the most in business. There's two fundamental levers you have to impact profitability. You can actually increase or grow one part, a certain metric within your organization, or you can decrease another metric within your organization. Think about in your business, if you want to create more profitability, drive more top line, bottom line to generate profit, what would you have to do? What do you have to grow? Do you remember? If I want to impact profitability, I got to increase. Don't leave me hanging there. More sales and less costs. So increase my revenue. My mouse is not working very well today. Increase, I'm just going to say rev or sales. Now, how can you increase that? You can increase that by better pricing. And that's a little bit what Tesla did. Although they had lower volumes in Q1, they actually got a little bit increased price because they were selling some more of those Model Ys, the newer versions. So increase your pricing or sell more as your levers. That's price. My clicker is not working very good. So that's what, let's see if I can get there. Increase price and or volume. And then, of course, you're going to reduce your costs is what you're going to do here. Okay. Increase costs. There we go. We may not be using that as well as much as we used to. Okay, so that's very important. That's what the market's looking at. When we say, are we profitable? Or a company says, hey, do they have a good quarter? Most likely, one of the factors they're going to look at is profitability. Are you generating profit? Assets is anything a company has, owns, or controls which has values. You think about a company like Tesla, what would be some of their assets? Put in the chat box. What do they own or control which has values? You think about a Tesla. Absolutely. We got plants, we got product lines, we got land, factories, machines, IP, absolutely inventory, cash. They got a lot of cash. Now, how do they then take that and deploy that to generate as much cash and profitability? There's two kind of sides to your assets. What we call asset strength. How much cash generation do you have? How much cash you have available? All the property, plant, and equipment I have. Now, how do I deploy that? How do I utilize that? What we call asset utilization to drive success within the organization. So assets is what do I have and how do I use what I have to drive greater profitability and success? And of course, growth is what investors expect. People are what makes it happen. So that simple framework of mind, let's go ahead and jump in and introduce you to the first tool. The first tool is how do I take all the communication and simplify it into something I can use and actually do something with? The tool is called the Executive Alignment Activity or the Executive Alignment Tool. What is it? All you're going to do is you're going to take those 5 drivers as you're listening to the call, use that as a mental model to assess what the company's really talking about. So as I'm listening to the call, I'm listening for, are they talking about cash, profit, asset growth, and people? Rather than trying to capture a bunch of information, you're just listening. Are they talking cash, profit, asset growth, and people? So on the left-hand side of the tool, that's all you're doing. You actually create slash marks. So for example, we took cash and we invested in new technologies. That's going to be cash. And it's also going to be assets because I just invested in new technologies. They talk about revenue being down over year. Revenue is going to definitely be profit, but it's also going to impact growth. So you just make a bunch of slash marks, and over time, you're going to see a list of number of times they talked about. Then from there, the next step is you simplify it by just jumping to these, what are the 4 questions I want to answer based upon it? Now, some of you might say, Brent, look, I haven't taken your class, so this is all new to me. No worries. Right here, you're going to have basic definitions of each of the drivers. In addition to that, right next to that in the pink there, you're going to have examples, what I call trigger words, words that if I hear them, I know I'm going to put a slash mark for that driver. Now, once you get through that initial review, you answer 4 simple questions. Which business drivers seem to get the most attention and why? What are the 2 or 3 key messages the executive was trying to make? What are their goals, trends, or objectives going forward? And then because you're listening to the earnings call, the last question is, what were some of the key questions or concerns that were raised by the investment analyst community? What are they asking? What are they trying to clarify? That's how it works. Now, once you listen to the call, this can take as much as 10 minutes to 30 minutes to do a little review and discussion with your team. What I want to do is I got two quotes, one from Elon and one from their their CFO. And I want to just practice using this, and then I'll show you some of the results that I got from my assessment. So let's go ahead and share this right here. So open up your chat box, and I'm just going to walk through this quote. And actually, it's a combination of a couple of quotes from Mr. Musk. So as you hear it, just put slash marks in the chat box, or just tell me what drivers are we focused on. So here we go. The future of the company is fundamentally based on large-scale autonomous cars and large-scale, large volume, vast numbers of autonomous humanoid robots. Don't be thinking of iRobots, the movie. It looks very similar, by the way. Anyways, yes, definitely assets for sure. And large scale, our company fundamentally based on, what are we trying to do? Yeah, potentially growth as well. Those two come to mind, asset and growth. We expect to be selling fully autonomous rides in June in Austin and move the financial needle in a significant way around the second half of next year. Now, one of the unique things about what he's doing is he's creating an application or an AI that can work in any city, where a lot of companies are coming in. Okay, let's specifically focus on Phoenix, Arizona. Let's do this autonomous drive just on Phoenix. He's actually creating technology. It doesn't matter what city you're in, the technology will work. And that's potentially a game changer for them. Whether you like it or not, the technology, you can just say, okay, I'm going to build one for each of these locations, or it can be build a vehicle that can work on any location. So that's what he's talking about that. We expect to have thousands of Optimus robots. Optimus is the name of the robots, working in Tesla factories by the end of year. And by 2030, you're going to see some pretty significant improvement. In fact, he's saying by 2030, actually, the way this is broken up, it should start this next sentence. By 2030, I feel confident in predicting millions of Optimus units per year. We expect the stationary energy storage business to scale ultimately towards terawatts versus megawatts per year. So very good number. So he highlighted cars, autonomous driving, as well as energy storage. So yes, as you look at that, we got profit, you're definitely getting growth in assets, and you get a little bit of profit. Interesting, Sergio. Robots versus people. That's a great. Those robots obviously work in manufacturing, but if you've ever watched iRobots, that idea, don't look at the second half of the show, but the first half of the show, this idea of having robots do a lot of work for us in our lives. Interesting kind of focus there. Not allowed. He hasn't actually stated any numbers. Yeah, so the detail isn't quite here yet, for sure. Something that Tesla has been working on for several years is localized supply chain. So now he's talking about tariffs. Obviously, we're all aware of tariffs, and he's going to talk through his tariffs. It's interesting, if you listen to him, he talks about tariffs, in his opinion, are not good for industry and lowering of tariffs. But then he quickly says, look, the government is making their decisions. I don't control that, etc. He speaks to that. But one of the things he talks about is they had already done this, and this isn't just Elon. Most companies will try and build a resource, their supplies, as close as they can to the manufacturer. That's ideal. So Nissan, for example, we've done some work for Nissan. They got some great plants over in Tennessee, in Mississippi, etc. They'll try and source as much parts from those local areas. I think Tesla's about 80% sourced local areas. So he's talking about tariffs. He says something that Tesla has been working on for several years is localized supply chain. This makes sense from a cost standpoint and from a logistic risk standpoint. So that puts us in a stronger position than any of our competitors. He's specifically talking about tariffs. So right now, Perry, the robots, or he's using them for his manufacturing. So they haven't spoken, or he hasn't talked about selling, at least to my knowledge. He hasn't communicated that to market. He's using them internally right now. While there are many near-term headwinds for us and the broader industry, the future for Tesla is brighter than ever. The value of the company is delivering sustainable abundance for all. That's his last statement there. So if you look at, just scroll up and down your chat box, you start to see some themes. For sure, you see a lot of the drivers being looked at, but definitely you're starting to see some themes. Growth, we're seeing a lot about assets, profitability. So basically, Sergio there, profit, assets, and growth, you're seeing a lot on those for sure. Let's jump to his CFO, Mr. Tunisia. Here's what he said. Go ahead and review that. And just as I read through it, just go ahead and put it in the chat box where you see them. As Elon mentioned in Q1, we achieved something which has never been undertaken in the automotive industry of updating all of our factories for the best-selling car in the world, all the same time. Now, when they talked about, I double-checked their notes because I was like, really? I've always noticed that if you're familiar, in North America, what's the most popular vehicle? Vehicle. Doesn't matter what kind of vehicle, truck, sedan, etc. Anybody happen to know in North America what the most purchased vehicle is? Good guess. The Toyota is really good. It's the F-150. The F-150 for 50 years has been the number one vehicle in North America. So they said, hey, we got the number one vehicle. I said, really? Let me double check that. Globally, Tesla is the number one selling vehicle. Right behind it is the globally Toyota's, I can't remember if it's the Corolla or the Fav, what do they call it? Somebody said it there, the RAV4. The Ford F-150 is down about 5 down, but they did about 400,000 Teslas in North America, but your F-150 was about 750,000 in North America. Anyways, that's what they're talking about. They retrofitted all their manufacturing to be able to sell or produce their most popular vehicle. Additionally, we also hit record gross profit for energy storage business in the quarter. The performance of the business is pretty profound. I know tariff is the hot topic, and it has various impacts on the vehicle business. We've been on the journey of regionalization for years. There's also an important impact of tariffs on our capital investment. Our CapEx guidance for the forecast is still to be around $10 billion. So what drivers are you hearing as you listen to that communication? You'll see some similarities, right? You're talking about a little more cash here. We're talking right here, these right here, 10 billion in capital spend. Capital expend, that means I'm buying more equipment, I'm building out plants, etc. Yes, growth. You continue to see a lot of growth. So folks, that's how you do it. Now, we don't have time to go through the whole call. It's about an hour and 15-minute call. So what I've done is I went through, it might look something like this. Now, if you did this, one of the things I would highlight, we do about 1,200 sessions a year with our customers. And what you find is we're not going to have the exact slash marks. So the idea that if you did this and I did this, we'd have the exact same slash marks. It won't happen. It's not an exact science. That being said, what I find doing about 1,200 of these a year is that the top 2 or 3 drivers will always rise to the top. So you'll see them towards the top. So if you look at them, you definitely see assets and growth. And that's what we saw as we looked at Elon's quote. But not too far behind, you had profit and cash. There was not a whole lot about people in the call. So now that I've seen that, okay, I'm seeing a lot of emphasis around growth and assets, profits up there as well, cash. Okay, let me go and answer the questions. So let me go ahead and do that as my quick review. Now, one of the things you'll find as you do this, what I love about this is the tool is absolutely helpful that any functional role could use. And what you find is different functions will listen to the call and actually see things a little bit different. What you would expect, right? If I'm from the finance and accounting function, I'm going to be looking at all the numbers and what's happening to cash and profitability. If I'm in operations, I might be looking at sustainability of my assets and growth focus. If I'm in HR, I'm focused very much about the internal team. So what's communicated? So my point is this is just a tool to help you capture that information. And based upon your focus, whatever's coming to mind you should be focused on, that's what you want to be working on, have conversations with your teams, etc. Yes, right. I mean, the people driver conversation there with the robotics, that's going to change things for sure. So here's what I've got. I've got growth and asset as my top 2. Let me jump in why. Obviously, big initiative, big focus around their Model Y delivery events, and then retrofitting all their factories to be able to produce that. So all this stuff that I kind of highlighted yesterday, big growth opportunities they're focused on. So what did they say? One of the key reasons why growth and asset got a lot of time and attention is celebrating the achievement of updating all 5 factories to produce the new Model Y at once. The ability to focus on your best selling product and produce as much as you can. What other things around growth and assets? Predicting fully autonomous rides, millions by the end of 2026 of how many people are going to be in these riding in these vehicles. 10 million within several years is what he suggested. Focus on AI and R&D. That's a big emphasis of where their growth is coming from. Optimus robots, cybercab, battery cell technology. Heavy amount of cash going towards CapEx. So you could obviously bring cash up as a key driver, but a lot of that's focused on the growth of the assets. So I'm taking that cash and investing in technologies, resources, plants to be able to produce more assets I can potentially sell. Tesla plans to release more affordable models in near future to capture more of the market that was highlighted, but with no specific time frame on that. So, why are they focused on it? Where's all their cash going? It's going towards assets and growth. Very big focus around that. Now, why growth? One of the things is he's talking to analysts. So a lot of times growth is going to be towards the top. What were the 2 or 3 key messages? Here's one of the key messages that you found. With all that's going on in media today, both about Tesla or actually about Mr. Musk, here's kind of their communication in the market. Tesla is undergoing a strategic transformation towards full autonomy and human robotics, which it seems as future revenue pillars. So all the technology investment, artificial intelligence, vehicles and other software, battery power, big focus of what they're looking at to drive the future. They've got short-term challenges. That's that political stuff. And then other challenges as they move forward, such as product disruptions, tariffs, and brand perception are real, but they feel like they can manage through them. And actually, if you look at their stock price, it hit a low of $222. It's back up to $362, $369, something like that, within just a short period of time. So you see it really drop as you got all this kind of political stuff, and now you're seeing it start to increase as well. So short-term challenges, it's difficult to measure the impacts of shift of trade policy on the automotive and energy supply chain, our cost structure, and demand for durable goods and related services. While we are making prudent investments that will set up both our vehicle and energy business for growth, the rate of growth this year will depend on various factors, including the rate of acceleration of our autonomous efforts, production ramp of our factories, and broader macroeconomic environment. So they're recognizing that some of these factors are going to impact their numbers throughout this year. And then number 3 kind of key message, in my opinion, was driving future growth requires expanding affordability through innovative manufacturing, like unbox assembly, cybernet. It's interesting as you look at when do they replace Elon with a robot? Optimus Prime, Raymond. We're getting a little bit of jokies here. Okay. Like unbox assembly cyber. You think about the Model T from Henry Ford, they did the assembly line. What they're doing now, and they're seeing much lower cost and a faster pace, is building parts together at the same time and then a quick assembly. So like the battery segment, get that all built, build actually frames, the interior, you build it, and then you bring it all together with robots that then put it all together at a faster time at a lower cost. So that's a big focus of their company moving forward. What are their goals and trends? Launch a robo-taxi service in Austin. That's the fully autonomous vehicles. You jump in, there's no driver, and you go. Begin production of affordable vehicle models by mid-year. So they're looking at mid of this year, although not a lot of conversation in this call about what they are. Deploying thousands of Optimus humanoid robotics in their in-house. So that's within their manufacturing process. Continue localizing supply chains to manage tariffs and ensure competitiveness. So how they can deal with tariffs, be more local, and they have a very high percent, by the way. It's like it's 80+% of their vehicles. They meet all the high-end built in America kind of criteria that they're talking about right now, being 80% built products coming from US-based manufacturers. The challenge, though, is that their regionalization has Canada and Mexico as part of that regionalization. So they will get hit some. Expanding its energy storage and battery capabilities to global markets. So a real emphasis on how, now we got all this electronic vehicles, all the AI that's coming out. How do we make sure we have enough power to run this equipment? Well, so where are the analysts coming? Now, a lot of times you'll have executives say, don't worry about reading the analyst questions. Here's what I'd say. No, go ahead and read them. Here's the value. You start to see where the analyst community is either kind of agreeing with them or potentially where they're questioning them. They're saying, look, what you're saying is really not what I'm seeing. Why is that? And so they try and keep them in check a little bit. And so I like to read them because I see, is the analyst really going to buy what they're saying, or they have a different view of it? It helps me to get a little litmus test of the accuracy of what's being communicated. So here's what they push back on or communicate. The realism of robo-taxi timeline and the need for fully self-driving FSD to truly operate unsupervised. Now, right now, the way they've got it is they go to Austin. It is run fully autonomous, but they have individuals supervising as they roll out the first phases. Eventually, they're talking about going fully unsupervised. So their question, is that really going to happen? I think sometimes if you look at innovative CEOs, Elon Musk, Steve Jobs, et cetera, they often put a vision out there that's quite futuristic, and you question, can they really do it? And to be honest, Tesla's been talking about this robotic taxi for some time. And so even in the communication on the call, they kind of question that. Is that really going to happen in June, like you've been telling us, but it keeps getting delayed? Now, suppose it's going to happen, but that's something you would check up on. How tariffs and geopolitical factors might impact cost and scalability. So although they talked about, hey, we can manage through it, they talked about the stock price. At the time of the call, their stock price was down. The question, hey, how is this really going to impact the long-term sustainability of your business and your brand? Clarification on affordable vehicle roadmap. Trying to get more information, like somebody asked in the chat box. Hey, they don't really talk much about these. What are they? Give us more information. And that's what the analysts were asking about. And then finally, kind of market penetration challenges with the Model 3 and Y. They're just so pricey. Like, how are you going to broaden the market? So bullet 3 and bullet 4 go together as questions they have. Folks, that's the analysis tool. Now, what you'll find is once you do this 1 or 2 times, it gets easier and easier to do that. I often recommend as well, AI can help a little bit. Take the transcript, put it in, and just ask questions. Go back and forth with your favorite AI technology. You can get a lot of clarity. So what do we know? We know that growth is a big focus, assets a big focus, profitability, and cash. Those are the ones that are focused. Now, by far, growth and assets are the big focus. Where do they see that going? Continued vehicles, the ramp up of all the manufacturing capabilities, the electrification or electric generation focus, and as well as these robotic opportunities. Now we say, okay, now that we kind of understand where they are, let's go look at their numbers, see if the numbers actually give us information. So let me go and jump here. This is the tool. If you've been through our class, this will be familiar. For those that are new, great question, Perry. I don't know that they gave a specific number on how much of their 25 CapEx, which is about 10 billion, is going specifically to robots. I do know a fair portion of that's going to the AI, though actually play a significant role around robots, but I can't remember exactly a specific number given. So I know a fair portion is going towards that, but it's also AI and their automation as well. So a lot of dollars going through AI, whether it be automated cars as well as robots as well. Okay, for those that are new, let me quickly review this. On the left-hand side, you have the 5 drivers. If you haven't been through our class, we did a quick review of that. Now, what you're going to see next to this is these are the most common metrics any company could look at. Now, each company will have their unique metrics, but what we've given is just a very simplified. If there's top 10 metric that any company would always look at, these are the top 10. So you can get a baseline. Once you get comfortable doing it, listen to your companies, what they're specific. For example, we just look at bottom line net income. Many of our companies might look at something more operating income or a gross profit or something like an EBIT or EBITDA metric, okay? So just figure out whatever your key profitability and just say, is it getting better or worse? Are we generating more profit or less profit through higher revenue or lower costs? That's what you're looking for. So you figure out what their unique metrics are, and you can do the same tool as well. Now, the way it works is it tells you what's the metric. Then it says, what's the line item you're looking at in the statement itself? Then the genius of this tool, in my opinion, is right here. You don't even have to have gone through an accounting class. Right here, it'll tell you where you can go to find it. So if I want to find my cash and cash equivalent, I'm going to look at my balance sheet. Now, the next step is there some sort of calculation? Now, you'll see here, there's a calculation right here, and it brings it right over here when you got a calculation. These top 4, there's no calculation needed. You just put the number in, okay? So here's what I want to do. I'm going to only take just a few minutes. We only got about 13 minutes. It'll take about 3 or 4 minutes. We'll walk through our key numbers. Then I'll give you the numbers. We'll finish our analysis phase. So here we go. Look, we're going to start by looking at cash and cash equivalents. So in order to get my cash and cash equivalent, based upon my tool, let's everybody join in. Open your chat box so we can all practice using this together. Based upon my tool, if I want to find cash and cash equivalent, what statement do I need to go to? By the way, it's the one I just shared. Excellent. So I will my balance sheet. You don't have the balance sheet, no worries. I've got it right there for you. Should be able to see that there. Hopefully on your screen it works okay. We're looking for the line item called cash and cash equivalents. It's towards the top of the document. When you see that number for 2025, at the end of Q1 of 2025, how much cash did we have on hand as our cash and cash equivalent? Put in the chat box. Excellent. Yes, we're $16,352 million. That's the cash and cash equivalent. Now, before I jump back to the tool, let me just remind you, for those that have been through our class, when they talk cash, they're also going to bring this number in right here. So cash and cash equivalent is either cash in their system or in their banks, or it's short-term investments that convert to cash in 90 days. That's what this first number is right here. The number before is their short-term investments. If I have more cash than I need in the next 90 days, I'm going to take a portion of that cash and invest it in something that will be greater than 90 days, but less than a year period of time. So when they talk cash, they're going to combine the two. It'll be about 36 billion. But if you look at purely at their cash number, actually their 90-day cash at 16,352,000,000. Okay, so now we're going to go ahead and jump into the next line. Let's do our cash flow from operations. Based upon the tool, what statement do I need to go to find my cash flow number? Excellent, Michael. It's our cash flow statement. I'm going to jump right over here. Now, for those that have been through our class, you'll remember that this statement provides one of the most important line items of all the statements. It's called our net cash provided by operating activities, sometimes referred to as cash flow. Look about halfway down, you're looking for net cash provided by operating activities. My cursor is just by it there. Okay, put in the chat box, how much cash flow did Tesla generate in Q1 of last year? There you go, $2,156,000,000. That's how much cash they generate. So you pull that over. Now that's legitimate. How much cash they generate in one quarter? This is net of, they've already taken out of all their operating expense. This is what's cash is left over. Let's do one more on the P&L. Everybody jump to the P&L with me. We got to get our total revenue, net income, then we're going to do a calculation. So here we go. Get my total revenue. Now you'll notice they break up their revenue in different types of revenue. So make sure you come down here. Here's our total revenue. So go ahead and take that 13,967. Oops. Excuse me. Oh, I can't see my own screen. It's all the way down here. Sorry. Right here is the number, total revenue. Thank you. Thank you. Sergio, you keep me honest. Diana, thank you. Keep me honest here. So it's a 19,355. I plugged that in. Now I'm going to go back. I got to get my net income number. We're going to go all the way down here to the bottom line. See what happened? Their profitability's down. We knew that it was, right? They sold less. Look at their revenues down year over year. They also had a big expense that hit them with a restructuring and other things that they had. But anyways, you see that drop. So there we go, 405. So then you take this number, 409, excuse me. I said 405, meant 409. Then you're going to divide that. Why did I get that number in? That's the wrong number. This is a typo here. Fix this for me. Somebody grab your calculator. This should be 409 divided by 19,335. 409 divided by 19,335. Excuse me. Yeah, 405 divided, 409 divided by 19,335. Tell me what you get. Help me out here because I got a typo here. It's not going to be this number, I don't think. There you go, 2.1. There you go, Liliana, thank you. Angel, thank you. Good to see you again, Liliana. Angel, others. So yeah, it's a 2.1. So this should be 2.1. I put a typo in there just to make sure you're tracking with me. Actually, it was a pure mistake there. Okay, so that's how you do it. Now, folks, for those who are brand new, as you just do this multiple times, you'll get it. Now, many of you have been through the class. You've done this a couple times in the class. It gets easier and easier. And what you're doing on your company or the customer you look at on a consistent basis, you'll get better and better at that. Here's the number. So here's their total numbers. If you look at their numbers from Q1 of last year, you'll see that a few of these numbers have changed. Revenue is down year over year. If you scroll through and look at some of these other numbers, you got a big dip in their growth numbers at the bottom. What do I know? I know that they had their Q1 wasn't as strong as it has been in prior quarters. Yeah, the cash transition that you're seeing there. If you look at this, they're focused on profit and they're focused on growth and they're focused on assets. I see in their numbers that numbers are crunching, but they talked about this big retrofit they did in Q1. So they didn't produce as many products to sell. So the real question will be what happens throughout the rest of the year. So what do I know so far? Actually, profitable company, had a tough Q1 compared to its comparables a year ago, but there's reasons why. Whether it be geopolitical issues or the political issues, whether it be the retrofitting of factories, they're down a little bit. They commented that the rest of the year, you should see those numbers improve. Now, how do I do something with it? Folks, this is probably the most important part. You can go through this analysis and say, oh, that was interesting. I learned a little bit about Tesla. Or I learned a little bit about my company. If you don't do something with it, you've wasted your time. As we've had a chance to work with many great companies, 34 of the Fortune 50, at one point we had companies come say, how does business acumen really drive success within an organization? Unbeknownst to us, after we did the training, they did this assessment. It was an ROI study on their investment in business acumen development or training. Here's what they found. 84% of those that participate in business acumen listen to calls, reviewing calls, understanding your business, improve the performance of your business and function. 81% increased collaboration, how well they worked across different groups. 77% improved upward communication, how I communicate to my management leaders, an alignment of communication. 77% said they improved employee engagement. 75% they increased business focus, and 84% improved teamwork by understanding your company and then doing something about it. Folks, that's what we want to do. To know and not to do is not to know. You've got to take something and do something with it. So the last step is absolutely important. What I did is I looked at it and said, what were the new insights that I gained? Obviously, autonomous vehicle and humanoid robot. I wasn't as familiar on the humanoid robots, to be honest. I did them 4 or 5 years ago. We did them as one of these groups. And it's been a while since I looked at them. But that growth, they were talking about them then, but to see what they're doing today was interesting. Basically, it's no longer future concepts, but active product ramps. Q1 saw significant declines in revenue and net income year over year. Why? Because of the retrofit as well as some of the geopolitical issues. Despite challenges in automotive segment, the energy generation and storage segment shows strong growth. So one of the things we always think about the vehicle side of it, but they have other products that help withstand some of the ups and downs. So the diversification of their products. Tesla is making significant progress on the autonomy goals with concrete timelines for initial robo-taxi service launch in Austin and just next month, and wider availability for unsupervised full self-driving later this year, FSD. So why the stock went up after all the cash flows, financials? Actually, Diana, I actually double-checked the financials. It looks like that number, so this is what they were talking about. I had 2 typos in my group. I just realized. So this jumps back up. Remember, this was 16 billion as well. This is an addition of, it's including their short-term investments. So really, it's about 16 billion each quarter. So Dan, apologize on that. You caught my second mistake. As you look at let me come back here and then we'll wrap up with some of these questions here. So significant emphasis on that kind of self-driving. Then affordability and cost reduction are key strategic focuses, including the planned introduction of new, more affordable models. Is how they're getting more market share is their emphasis. So what would you do with that? If I was an employee, I would be looking at the Robotaxi and Optimus. We talk a lot about these products. Is it another delay? Or are we really going to see them coming out? Because that future of that, the Robotaxi idea, there's a lot of market opportunity. And the way they're doing it, it can ramp up much faster than Waymo and some of these others of what they're doing. I would look at how tariffs impact them. What's going to happen, especially on their supply chain, of course, here in North America, how that's going to impact their profitability here. And the last thing, make sure that you're aligning sales strategies to showcase Tesla's unique AI-powered value proposition. So really recognizing the future for them is fully autonomous vehicles, robotics, etc. is a goal of their group. Now, for me as a consultant, what am I going to do? I take that information. I'm going to share that with my colleagues, my peers. We're going to use it in our training. What's going on in that very cutting edge technology space? I share that with my consultants, my clients and customers. And then, boy, if you're a Tesla employee, we'd love to work with you. I'd love to build your confidence and capabilities as you make these huge transitions in your organization. Folks, once you're done with it, the last step is to have a conversation. If you look at your own company, go talk to your manager. Share what you saw. Explain, hey, here's what I saw. Here's what I think we should focus on. What a great way to build your credibility in your organization. If you looked at a customer or partner, share that information, how we can work better with our customers or our partners that we're working with. And if you're looking at a competitor, how we can differentiate ourselves in the organization. Folks, that's the tool. As you look at it, all you're going to do is prepare, analyze, and apply. So as you wrap up, let me just kind of share. The last step is once you've done this, you go to the next quarter, the workbook becomes your review the notes from the past call tool. That's how you look at it. As we go to wrap up, here's my question to you. Next month, we're going to do BlackRock, a major investment corporation. We're going to look at them. The question is, who are you going to analyze, taking this tool and do something with it? Don't just come and listen. Take it and now go engage with conversations look at another company. Come and join us next month as we get a chance to look at BlackRock. Folks, in the chat box, you'll see the links to all the information. You want to get access to the webinar tool, there's resource, the workbook, click on that first one. If you want to engage with us to learn how to apply this with your team, we'd love to talk with you. Working with 34 of the Fortune 50, love to share how we can help build your business acumen. If you're an individual, you just want to be more comfortable on your own, we give you $100 off our self-paced, seeing the big picture business acumen course. Very dynamic, very engaging. Absolutely recommend it if you're just looking for yourself, get better at business and financial acumen. The last one, Brooklyn, our marketing team has done a great job of curating a number of videos, quick little videos that'll help you on any topic you would look for. If we don't have the topic, send a text or an email to one of us. We'll put a video out for you. Folks, it's absolutely been my pleasure to spend some time. I know many of you have to leave, but let me just double check on some of these questions for those that want to stick around. Feel free to disconnect, but let's see, there was a question around performance around competitors. The whole market was down in Q1, Perry. Let's see how, no, that was, who was asked, somebody asked a question around the market and their competition. Q1 compare with other competitors. You saw a real slowdown in automotive industry in Q1, especially in North America. You also saw it from a global perspective as well. These tariffs and some of these implications, you saw oil price, for example, jumping down to about less than $60 a barrel. So that slows down a lot of the internal combustion engine purchases and electric vehicles as well. So Q1 was a little bit slower the market, but Q1 is typically slower for the market around automotive industries. It's not the time where most people are buying vehicles, Q1. So you see that slowed down across the board. We did Rivian's numbers last year, but it was year-end numbers, last month, it was their year-end numbers. So I don't have their latest and greatest on their Q1 numbers. Interesting enough, if you looked at Rivian with us last time, Rivian expects to get bottom line profitable by, I think, 26. It'll be basically the exact same timeline, number of years it took for Tesla. So Tesla starts in 2003, profitable in 2020. 2009 is when Rivian started, and they will become bottom line profitable in 2026. So very similar kind of timelines, if I remember right. Anyways, let me know if that answers your question, Perry. Good question there. Why the stock went after the call with those financial results? Diana, it's interesting, the exact reasons. Some of the factors, though, sometimes when a company has a call and the market is anticipating it's going to be really bad results, the market actually starts to prime the stock price. So you see a drop in anticipation of the call, expecting the results to be bad. And then if they either they're not as bad or they're just even a little better than the market thought, you're going to see the market calms down. It's the same thing you've seen with these tariffs a little bit, right? A tariff gets announced, you'll see things drop. And then they switch it back and they put them on a moratorium, for example, in China, all the crazy ramp up of tariffs there. Then they put a 90-day moratorium and you saw a bunch of stuff jump. It's the anticipating. Remember, the market is saying, what's the future potential value? And if you get bad news, geopolitical, supply chain, or whatever, the market will actually start to see a decrease in that value. Then you get new information, and it's not as bad as you thought it was. It's going to improve. I remember this in the oil and gas industry. Years and years ago, BP had an incident in the Gulf of Mexico. And for years, they're paying up, to be honest, tens of billions of dollars of payments for that spill they had. And then the last year they went before court as the last settlement they had to deal with. And their stock price drop in anticipation. Then they only had to pay $5 billion left. Now, you say only have to pay. That's a lot of money, folks. But in the past, they'd been paying 10, 15 billion. So all of a sudden they hit this mark and it totally changes the game. So their stock price jumped. They thought, okay, it's finally done. We can get back to normal and see an improvement. So those factors I'll absolutely play in there. Folks, thanks for sticking around. I don't know, team, was there any other questions that I missed? We had a lot of questions on this one. Any other questions we missed as we went through? The first question, let me just see what was. Oh, it's not there anymore. Okay. Folks, feel free to put another chat. I'll stay another minute or two. I know a lot of people are jumping off, but if there's any other questions I can help with. Stephen, yes, it is recorded and it will be available. Does that mean that they are good to invest in? Let me give you my what do they call it? The fine print, right? It's my, don't use any of this information that I give you. I'm not a financial plan. Don't make decisions on your financial investments based upon what I say. That being said, there's a lot of tech companies that are advancing. They're going to play significant roles in the future. So to what extent? Talk to your financial planner. Lillian, thank you for joining us. Good to have you. Hope all's well. Well, folks, we're off beyond the hour by 5 minutes. Often we're pretty close to ending. I know a number of you had some questions. So if there are any other questions, happy to answer. Otherwise, as a team, we're going to shut down, and we look forward to seeing you for BlackRock here in about a month. Well, thank you, folks. Have a great day.